Peace and blessings. Yeah, happy Turkey Day. Folks, they're gonna be eating turkey bar. All right. We back, South Factor Wednesday. And we're gonna start off today with CL on the chart. All right. So we looking at CL for one good reason because it was set up, was called a 3 day setup, 3 days of breakout, and it played out masterfully on CL on Monday. If you look last week, I'm gonna walk down on it, but I just gonna show you my chart. So this is it fully drawn out. I already put my bear there on Sunday. I was like, yo, we bearish. And I'm gonna walk down a series of events that caused us to go down. That was my setup. So you can see it. So when Monday hit, that was my trade right there. That's my entry, that's my exit. I was happy with it. Perfect. Right. So I'm gonna walk down on that on here, and I'm just gonna walk back through it. I'm gonna explain it. That way you can see what I'm talking about and see the mindset, see how I recognized it. And then we're gonna walk down on a couple of the charts and keep slowing. It's the holiday season, so we're gonna you know, all right. So first off, this is Friday, right? I had to highlight this because it's the previous week. So we mark out the week high, week low of the previous week. All right. Starting off, so we're gonna start off on Monday, looking at the close. So if you look at it, this Friday level, boom. This how last week set up. Okay, we had a break of structure, which interrupted this low trend, this downtrend we had going on here, right? As you see, we had a nice little downtrend going. Boom, we had a break of structure. Okay, with that break, we had two back-to-back gaps with volume and balance. There. Okay, cool. So with the break, you got a fair value gap with a volume imbalance on top of that of a downtrend. Price then going up. So let's get rid of that. So that's the first sign, first green day, because we closed out and breakout. This was the breakout level. It took out this lower high because you notice this is your lower high, lower low. Well, technically they went a little bit lower. This you could count that pivot, but we ain't gonna do all of that because we'll be here all day, right? So I'm gonna use a little Elliott wave thing to kind of show what I'm talking about. Right. So this we started here, right? Boom, pivot, pivot, pivot. Now what happened was, should have used the pattern. Came up, boom, boom. Instead of coming back down and taking this low out, we decided to take out this high. Boom. So that was already telling you it's disrupting the trend. Then from there, we're looking at Monday close. So let me put this up. So, third chart. So after that, look for Monday close. Here we go. So Monday close, Tuesday. All right. This is Monday, New York closing price level. So I'm gonna track that. Right. So we already broke out of there. We broke last week high. We got up out of there. So we already kind of broke out of last week Friday range. Now Tuesday rolling around. Guess what we doing? We boom boom. We rocking and rolling now, right? So here we go. Tuesday, New York. Oh, and then we're gonna just do the same thing. I'm just watching price close. We made another high. We closed above Monday price level. So we already know what time it is. That's another day of breakout, right? So that's day two. Now we get over to Wednesday. Probably should have put on my session breaks. Let's see. Wednesday was technically a red day. We pushed up higher. If you look at that's Tuesday high, we took that out, right? We did get a break of structure, but close in red. They didn't really want to close and break out until Thursday hit. Then we got that breakout to the upside. But you can see prices already kind of like fizzling out per se, right? You look for that Thursday level. Ooh. And this our Thursday. So when Thursday hit, we went up, we dipped down, came down, took liquidity from here, right? Dipped down, came up, kept on. Now, with that said, we had multiple days of price breaking out to the upside, took out last week high, and this is how we traded, right? So I'm looking at this price action. I said, okay, cool. We've been going up, 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 putting in new highs, breaking all previous day highs, and we're steady marching upwards. At this day, I know for sure, in theory, we should break down and do a reversal because we had 3 days of push. Now we're gonna have 3 days of fall, right? Just you understand the Dow theory, it'll make sense to you. Just study that. Right? None of this stuff is new. It's all concepts. It's in the financial markets. The book John J. Murphy, Technical Analysis of the Financial Market. It's in their book, Dow Theory, 3 ways to push. Goes in both directions, right? 3 up, 3 down. So using the channel tool, when I got here on Sunday, I watched the consolidation on the 1 hour. I like to see consolidation on the 1 hour. They let me know this price is about to make a major move, either up or down. But in this case, I was looking for a down push. During the London, late Asian market to London, price went down, right? So we had a down push. Boom, great. From there, I knew price would come back up. And if you look, this channel had already, it kind of throw like a middle line on it. So you kind of see center, like halfway point and say, all right, cool, we here and here. Now, in most cases, what I like to do is that pivot point to here, I would throw up a fib, say, hey, where are we landing at? I'm looking for the 61% retracement. Then when I come to the market, I'm going to drop down to my 12-minute chart. And then I'll be looking for my entry points, seeing where we're going to possibly break down at. But look at where it changed at 3 a.m. This is the London market, right? We deep into the London market now. And you see prices rising again. Coming back up, take out this pivot point high here because it's a little market liquidity. Right? We already see the retracement. They did 65%, close to a 78% retracement back up. Right? Tap into a little 3 order block continuation right there. So let's get rid of the fibs. But you can always, let's mark this out. Because I like to use the 27, negative 27 as target levels so far. So we can just mark these out. Right, 61. So TP1, TP2. So when it came up here, they got stuck. 1A below the halfway point of this channel, broke down, and it came back up to see, hey, can we trap buyers? Because a lot of people think price is going to continue upwards. It was already breaking out all last week. They're going to think the price is going to continue, and that's the trap. The goal is to drive it down, the people who went short here, and then they're going to make them think like, okay, they're going to pick it back up because most of us looking for price to continue driving down so they can hold overnight and they can continue holding their trade. But the people who got their stop loss after this pivot, right? Because once price did this, boom, boom, and it shifted away. Your safe bet to put a stop loss is right here. So you wanted to, right? Say, hey, stop loss and profit, right? You say, oh, my stop loss and profit though is above the previous high. They shouldn't take that out. Stop loss and profit. What they do, they spin a block, come take you up. They'll take you smooth out the game, get your price out of them. Because those traders who already had profits locked in. Once you see this pullback, most people case they're gonna say, hey, I don't think price is gonna come up this high. I'm good, I'm safe, right? Or you can say, well, I have my stop loss here. If you're trailing your profits and trading in London, you could have put your stop loss there and just continue waiting, for which they already took that out too as well. And then it starts shifting up. So that was your change in character right here. Or you can say your market structure shift. So the moment it did this, it failed to come back down to the low, right? Then it took this high when it did get up there. Pardon, I'm working on my code. But when it broke structure, when it pivoted from there, broke structure, boom, fell the tail and go back to the low. So they start telling you something, they're going to start retracing. If you're a patient and you come into the market in the morning, you know, like, hey, I'm going to wait. Don't need to click any buttons. Let's wait, let it get where it needs to go. And then from there, we're going to take action. So the moment price got up here, start doing a little consolidation, all you need is an entry, right? So once you enter your trade, boom, wait, boom, done. So typically, well, no, try that. That was 70, 70.99 to 6.99, 69. Those my levels. I'm waiting for them bars to come out because I was like, hey, got this. And the great thing about trading CL, you can always afford to stop loss. They are not unreasonable. I had like a 34 tick stop loss on this. About 32. Because I know for sure, a price shouldn't break past this. If they did, good luck, right? I'm not gonna be tripping on this. So they got me in on this candle. So I seen like a 14 tick drawdown. Then once this candle hit, it was murder she wrote. From there, I always like to shoot for 100 ticks. That's just me. Because I know for sure I can get that in 45 minutes and I can get in and out, right? So typically we at the 7 o'clock hour, rolling up, market get volume in by 8 o'clock, second wave of volume 8:30, right? So this 8:12, boom, 8:24, boom, 8:36, and there's your New York volume coming in. That's dumps. That's how it normally goes. It was cut, dry, simple. I waited patiently. It took 3 days for this setup to play out. I thought it was going to actually play out last Friday when it had, where was it? Yeah, this little dip here, right? The moment I seen it break down, I said, okay, cool, that's a little dip. We should be good. I actually took a small little scalp. Lucky I moved my stop loss in the profit and it came back and they said, okay, cool, we're gonna get up out of here. I was like, oh, okay, no hurt, no foul, made a quick little some change off of it. It is what it is. I just stuck with it because I knew I was wrong this day. Luckily, I moved my stop loss period quickly. I got out of danger, didn't have to take a full loss. That would have been tragic, right? For no reason, especially had green on the board. There's no need to take L when you have, profits on the board, right? Just lock in something, I would say. But Monday, when I seen all this play out, I knew Monday gonna be a no look back, no return, doom, doom, and gloom. But anybody still long on. And that's exactly what happened. Nailing, banging it, nailed it. Cheese let off the crack and it's over. It's done. Done. But this setup take 3 days. I don't know how patient you are, but I can wait. I love seeing these. I can wait once a week for this, once a month if need be. I'm very patient. I practice that. I love the patience. It's definitely something that I like. Now, Lee, with your question earlier, we was talking. I understand. I kind of watch certain tickers, right? I only watch certain tickers. So I know when the volume coming in. I'm tracking this stuff, right? I got notes. You look over here to the side. I got notes that I make on this, right? I make all kind of different notes. I study it. I look for the flaws in it. I know when the volume come in. I know when the volume goes out. I know what's the best time to trade. So with that, I set alarms. That way, I'm always ready to go. right? I'm ready to go to take action, get in, get out, boom, 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 and whatever else I need to do. Now, with the same 3 day setup, I also seen it on QQQ for anybody who trade options. I know not everybody trade futures, so we're going to talk about the options, but the technicals work the same, right? Let's understand it. They do. Let's see what I mean in a second. Let's go to our chart. So this was Friday, right? And it was all set up over here. I'm gonna break out here. Actually, I'm just gonna cut. I could cut on the session break. It's like that. So from there, it was the high. Price start is awesome. So the moment they stop making new highs, right? You see, capped out. Then you had your first red day. Then that led you into knowing like, hey, we're going down. The moment it was failed to make a new all-time high, they was already kind of gassed out because no way they're gonna keep gapping up 3 days in a row. It's not possible. Somebody got to take profits. Somebody got to get out the way. So understanding that you could have been positioning yourself to say, hey, they failing to make new highs. They're not making new highs. It's a pivot point. Oh, they swept that, failed to break out. Right? Then they steady coming down. You can easily like, oh, okay, cool. Who knew it was going to gap down like this? I think somebody had earnings, some bad news got delivered. So yeah, that's the results of that. But it works nonetheless. It works. It works. Rinse and repeat. Repeatable setups. They work on multiple markets. I like it. That's all I trade when I can. If I see those setups, I'm not leverage on that, and I know I can walk away very happy camper. Little to no effort. Low risk, high reward. That's how I look at it. Now we're gonna creep over the gold because they had a major drop on Sunday. I don't know what the heck happened. They just started dropping out of this world. We all watched it. You know, a couple of us traded it. It was fantastic. I enjoyed it. I know Rod made killing. Yeah, 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 yeah. Oh, I shouldn't. I wonder got the delete button. Blank that out. All right. So price dip. This was the moment the market opened, right? On Sunday. They dipped down, brought back up, and then they just proceeded to drop and reclaim all of this price action, right? So by the time we stopped right here. And 605.40, right? Boom. Right inside this nice little gap. Pivot move. But this nice move to reclaim all this price action, which gold needed to do. It needed a rebalancing. It had to do a rebalancing act. It's kind of like overinflated. As you see, they made a 61%, 65% retracing back into that fair value gap. Now goes pumping back up, reclaiming price. Now look, it's going sideways. You would have got in there, man. It really mind this stuff. It must have been heck hello, or whatever. Uh, Looking at it now, right? We still got a nice level right here. They haven't took this yet. What they're gonna do, not sure. If they're gonna come reach back up and get this, or are they gonna fill this gap right here, right? I know typically you get a gap. This is the continuation chart. So 9 and 10, it could have switched contracts. Reason why this looked like that. So we go to the contract chart itself. It wouldn't look probably some way or probably like something else. But right now, this gap is here. So that means the price is probably like a fair value gap right there on another chart, contract chart itself. But yeah, they made a major jump, hit that order block. Now he's stuck in this range. So we're going to see if they fill this gap, come back, rebound his price, or they're going to continue upwards, right? We're going to say, hey, what the investors calling it? They saying it's a good idea. We do want to buy more at this level. Bitcoin is about to hit 100,000. Nobody checking for gold like that right now. So everybody, long on crypto, congratulations for the wins and the profits. And everybody else side, dump they go. Yes. Now, on another news, because we have some coffee fans and coffee drinkers in the community, uh, JBA. They are a coffee company. I just recently bought some shares because the price of coffee hit its all-time high since 1973 recently. Somebody posted an article about it, right? So coffee is the new wave. Starbucks and so many other coffee companies are showing you where people are currently investing their money, where they spending their time at. I know I enjoy a good coffee shop and sitting there sipping some brew and it's enjoying myself, right? So, and many others do too as well. It's a big culture now. With that, the average cost for the beans are going up. And why not invest in coffee stocks? But you know for sure if the costs of it are going to go up, you can make money by buying into companies. I like to do distribution companies because they don't hold no brick and mortar, like a Starbucks or the Noodles or the mom and pops. I know for sure they're going to be selling beans. They're going to get contracts of selling the beans, no brick and mortar, or they just may be selling their brands directly to stores, which people are going to buy and going to be good. So look for opportunities like that to kind of, build your portfolio, especially on something cheap when they cheap like that. Coffee ain't going nowhere. It's all the praise. Everybody love the sugar with it. So yeah, keep that in mind. But yeah, that's all I had as far as those topics. I'm gonna stop this recording. My setup, my alert going off, like a pager or something, and you thinking that that's the right thing to do, that you clicking that button 10, 20, 30, 40 times, thinking like, hey, I'm really trading. So no, you're gambling. All right. You playing games, you gambling. That is not a setup. A real setup don't happen that often. Look for the A+ setups, get out the smaller time frames, get rid of the stress, get rid of the ego, admit that you're over trading, and learn and grow. It's the only way to grow is learn from your mistakes. But by doubling down, tripling down on these bad habits, taking these bad habits into the next year, it's only 2 more months left. And this is the last day of October, okay? So really only 1 month left in this year. If you take them same habits into 2025, because it's already here, folks, if you take those same habits into the next year, then you need a wake-up call, okay? You need a wake-up call. I'm going to say what I really want to say. It's going up to YouTube. Make sure I like, subscribe, and comment on this video. I appreciate that. But you take these same habits into the next year, and you're going to keep complaining about why me, but you refuse to let go of your negative ways. You refuse to let go and grow. You refuse to humble yourself, get rid of the ego, and say, hey, maybe I should change things around. Maybe I should change my plan or actually follow my plan and stick to it, right? If you lose more than 2 trades in a day, shut it down. 3 trades, shut it down. You shouldn't get past 3. You suck, okay? Number 4 ain't going to be the magic bullet. It's not. Shut it down. You're wrong. By the time you clean up the mess you made on the previous 3 trades, plus the fees, you still in the hole. You keep that up, you blowing your accounts. It's no magic bullet. If I'm wrong one time, I'm shutting it down. I only take me one time to say I'm wrong. I'm logging into my paper trade account. I'm gonna make it do what it do. If I'm right there, okay, cool. That means be patient, learn from your mistakes. But I'm not gonna keep tricking off on a broker with these fees. I'm not gonna keep giving my money up just to prove a point because my ego hurt. I'm not doing it. Okay. I highly recommend you take your loss. You're wrong that day. Shut it down. Be intelligent. Come back tomorrow. If you really believe in your trading skills, you should not have a problem coming back the next day because the market going to keep opening. Matter of fact, the NASDAQ, the New York Stock Exchange, they trying to keep that open 22 hours or 23 hours. They're trying to match the futures market. So really they're going to take it 22 hours a day. Opening on Sunday, closed by Friday. 22 hours, right? So it's even more trading they're going to try to get a place. And I guarantee you hit that button and y'all fall for that trap, you ain't going to be on these Wall Street streets no more. You're going to be out there having a GoFundMe trying to get another account. You're going to be begging for money. Yeah. Yeah, you're going to need somebody to spot you some change to help you get another, account for another challenge. Get you another challenge account. Mm-hmm. Yeah. Yeah, they're gonna have to set up rehab centers for Apex with all those cheap accounts y'all keep getting. Now, get it together. Tighten up. Don't take the habits into next year. Learn from your mistakes and grow. That's it. It ain't no other way around this. You can't. Yeah. Thank you, Rob. You know, at the end of the day, who you giving these profits up to? You feel me? Like you keep doing the same thing, you gonna keep getting the same results. There's no way around it, right? If you keep clicking that button because you refuse to sit down, take a break, learn the mistakes, review, review your charts, look for your best trade setups. Typically, we do this on Wednesday. Y'all can raise your hand about it, put it in the chat or whatever, unmute. After Wednesday, how many good trades is it? Maybe one by Friday? Is it one on Thursday? Y'all tell me if I'm tripping or not. That 100 tick move on gold, that 100 tick move on oil, that 100 plus tick move, that 1,000 tick move on any other tick. Talk to me, bro.
Happened real nice on Tuesday.
But after that, what happened after that?
After that, it's up in the air, depending on news.
Exactly. It's up in there. It's fairy dust. It's foo-foo. Once it have its good moves, it's dead. It's done. That's it. So when you keep carrying, trying to beat that horse and say, I'm going to trade every single day, all you're doing is subject yourself to losses, mental damage, and fees. Tricking off on the market. You're messing up your mental health. Now you're crying in mindset on Saturday. I'm enjoying the coffee. Enjoying my Saturday. Being bougie. My pinky out. Sipping. Expensive coffees. Being a coffee snob, what they say. Yes, it's mine. I'm having fine discussion over different beings from different regions of the world. You know, that's how I like to spend my Saturdays. But if you want to have emotional damage, keep trading like that. Yeah. Keep trading like that. All right, and that's my piece.